And so it's my privilege to turn things over to Jack and ask Jack to give us everything he's got. And even if we're here for 4 days, we're excited. So take it away, Jack.
Thank you, Dan. Good evening, everybody. Coaching clinic number 27. Man, and that doesn't count all of the workshops that we did prior to that for the last few years that we've been doing this on Zoom. And I've got to tell you, folks, I am absolutely stoked about this. I'm going to make you a promise. And the promise is that I am going to take what you feel and what you know, or what you think you know, and I'm going to connect the dots tonight. And I'm going to save you a ridiculous amount of time, energy, effort, and study. I've done it for you. I've done the research. One of the great leaders in our company, one of my few mentors, John Lavin, back when I got in the business, was just and still is an unbelievable crusader. A lot of us were victims of the insurance industry, but I've always said this. I've said this, and Jan Shear, a lot of the people that are on this call know that honestly, one of my worries that I have is that probably 90% of you on this call have never been on agent confrontation. You have no idea, no clue what it's like to go fight the enemy agent. You know, maybe it's because you haven't done enough appointments and replaced enough life insurance policies to where you've pissed them off and they got enough chargebacks that they had it with you up to here and they wanted to meet with you. I promise you, I'm gonna connect the dots tonight. So with that said, let me share my screen. We might be here for a week and a half. I'm not too sure, but I'll order pizzas around midnight for all of y'all, okay? And just sit back, relax. Don't worry about screenshotting or any of those things. I'm going to upload this to Dropbox. So as you know, I'm very into our tool belt. You know, we have a lot of tools in Primerica, and this one tonight is the sledgehammer. Okay, this is the one that we're going to take and beat the competition over the head with. You know, a couple of weeks ago, I don't know how many of you were on when I did the Indexed Universal Life Clinic, that workshop, and I made mention to you that that the insurance industry was rearing their ugly heads again. That for some reason they're feeling confident, they're feeling cocky, they think they can go out there and screw and tattoo the American public again. So I did a little bit of research on this, and let me show you what I found out that's kind of interesting. You know, this word crusade that you've heard since the day you got in this business, I know you know this already, but the word crusade is used to describe campaigns against injustice and poverty. And a crusader comes from the crusade, which is meant a campaign against public evil. And the definition of a crusader is a disputant. That sounds almost like a Marvel character, you know, one of those ones that change into a werewolf or something like that, you know, a Wolfman, and advocates for reform. That's what we are. We're crusaders. Make no mistake about it. So here's this is the fourth quarter report from LIMRA. LIMRA is the Life Insurance Marketing and Research Organization Association. And what they do is they compile all of the numbers about the insurance industry. So I want to show you the percent change from 2020 to 2021. Universal Life is up 30% over 2020. Indexed Universal Life was up 29% over 2020. Fixed Universal Life up 34%. Variable Universal Life up 65%. Oh, and by the way, term insurance was down 1%, and whole life was up 27%. Now listen to me carefully. In 2022, the insurance industry sold 6.3 million cash value life insurance policies. Now, if you think about that, I don't know what the ratio is right now. I'm not sure how many term insurance policies we sold last year, we issued last year, but I'd be willing to bet you it wasn't 6.3 million. I'll bet you that probably it's pretty close, that for every one cash value policy we replaced, they probably sold 100, 150 to one. So here's what Limerick came up with in the further research that I did. This is as of September 2022. The annualized premiums increased 6% in the second quarter. And in the first 6 months, they were 11% higher than in 2021. And it says that indexed universal life increased 27% in the second quarter, resulting in a 33% growth in 2022 over 2021. So if you don't think for 1 second that they're not out there screwing people, you are kidding yourself. I promise you. So how did that happen? How did this whole crusade, what happened? Where did we really come from? So I'm going to show you a short video.
The Great Term War of 1977 to 1990 was filled with many bitter battles, changing the life insurance industry forever. Met with stiff resistance from the enemy, the 225,000-strong A.L. Williams Army answered the challenge. However, nothing was left to chance. Every ALW agent knew what he or she had to do. Every operation was rehearsed in advance. Daily, they left their homes and headed into battle. Delivering heavy blows at enemy targets week after week and year after year, 80,000 whole-life agents were killed or captured. With the ingenuity and determination of the ALW Army, 95% of life insurance companies were destroyed. In one of the most decisive battles ever in the history of war, 41 million cash value life insurance policies were annihilated. The whole life industry lost countless agents, companies, policies, and customers, thus sealing their fate forever. How could that happen?
So I'll tell you how that can happen. We rehearsed and we were prepared. You see, on page 325 of the A.L. Williams Way, Art said that the first step to building a winning team is building Crusaders. On page 325, he talked about the 3 steps on how to build Crusaders. He said, you got to sell the A.L. Williams concepts first. Now, what are our concepts? The theory of decreasing responsibility, the rule of 72, right? The magic of compound interest, our concepts. And then you've got to show the wrong done by the traditional industry in the cash value concept. I will connect the dots. What I go through tonight, you are not going to believe that something like this can happen in America. You would think something like this can happen in Russia or in some communist China country. You would not believe that they get away with what they get away with. And Art showed us that you got to show the good that they can do in A.L. Williams. I'm not going to read the bullet points. And then he gave the 2 reasons of why we should build with Crusaders. One is Crusaders, we are the glue that holds the team together because we're out there fighting the fight. And a crusading spirit gives people the courage that they need to win. So here's what I found out. And I put some stars next to some of these titles, dating back as far as we can tell, boys and girls. 1877 was the first book written saying that cash value life insurance was the biggest scam in the world. And you can go to the A.L. Williams Way on page 112, 113, 114, 115. Look at this, 1877, listen to the title of the book, Traps Baited with Orphans. In 1917, A License to Steal. In 1936, life insurance, a legalized racket. In 1938, investing in disaster. 1944, you pay and you pay. Who the heck reads books like that, right? And for me, when I was a kid, it was comic books. It wasn't Superman or Iron Man, right? 1958, The Grim Truth About Life Insurance. Your pocketbook is leaking. In 1963, What's Wrong with Your Life Insurance by Norman Dacey. Remember that name. In 1968, the Houston Law Review. Remember that. In 1974, Consumer Reports. I'm not going to read all these, but look at this. In the A. Williams Way, it shows it all the way up to the year 2013. Now, these are books that are in my library. These are books that I read. Look at the titles. How Your Life Insurance Policies Rob You by Arthur Milton. The Mortality Merchants, the legalized racket of life insurance and what you could do about it. The Invisible Bankers, everything the insurance industry never wanted you to know. Stop wasting your insurance dollars. Life Insurance, The Great National Consumer Dilemma by Vanita Van Caspel. She wrote another one, Life Insurance, Still the Great National Consumer Dilemma. I guess people didn't get it the first time. The Insurance Trap, Unfair at Any Rate, Herbert Denenberg. Remember that name. The Canadian Guide to Life Insurance, How Not to Get Ripped Off. Look at this. This is the New Jersey Insurance Buyer's Guide. The state of New Jersey, the insurance department, look what they wrote. Probably the least expensive of all life insurance based on a rate per thousand is level term. And they talk about term as the no-frills model of the life insurance industry is relatively inexpensive, easy to understand, and in general, the best value for the premium dollar. However, there's a good chance your agent will not discuss term insurance as an option for you and your family unless you bring it up. And it talks about whole life and interest-sensitive life and universal life and vanishing premium. What wasn't in here is indexed universal life. That's why we covered that a couple of weeks ago. The games and scams of cash value life insurance. 1963, Norman Dacey wrote this book called What's Wrong with Your Life Insurance. Let me tell you a little bit about Norman Dacey. Most of you have never heard of, because you're too young, you've never heard of a guy by the name of Phil Donahue. Phil Donahue was the Oprah Winfrey of his time. He had talk shows that went on for decades. I'm going to play you a short video.
You got to feel a little bad about that.
A little.
I mean, it's an important issue. You have children?
2.
All right, in this age of inflation and diminishing work opportunities, all those things, his life insurance policy is going to become, after the grief, the number one feature of your life. And you don't know how much you're going to get, if anything.
Uninformed.
Yeah. Well, you're dismissed. I'm sorry. We can't. All right. I think what's important about what you said is that there are millions of people who could say the same thing. Isn't it a shame?
It makes me feel a little bit better.
Yeah. How about you? Help me.
I had to take out more insurance since I passed 40. Why, I don't know.
Well, who obliged you to do that?
Our insurance agent.
He wears a uniform, does he, and a badge?
He didn't explain it to me, though, why I had to do it.
Do you know the difference between whole life and term insurance?
No.
Do you? Can you explain? Okay, hang on just a minute. Boy, we got a PhD audience here. What's the difference? You want to stand, please?
Okay. Whole life insurance is a policy that carries through for your whole life. Term insurance is something that you take and it decreases as the time goes on. You take it out for...
Does term insurance have to decrease?
The price of it doesn't increase. You pay the same premium from year to year.
Yeah, but is the face value of the policy, does it have to diminish?
That I don't know.
Which is the better of the two policies in your view?
I would say the whole life.
Yeah, because?
Well, because at the end of the time, you're going to get back all that you put into it plus dividends. At the end of the term, if you're still living, you don't get anything back.
Right. Do you know why?
What?
Today's guest is really going to disagree with you. But that's all right. We're all here to learn. And it doesn't necessarily... Listen, this is complicated. A lot of people share your view, and I want to talk about it, so don't leave me, all right? Norman Dacey, an estate planner from Connecticut, a man who has been under a burr under the saddle of the insurance business for a long time. You are foursquare in favor of term insurance, and in fact, you won't even go near a whole life policy, will you? Tell me why.
And he's not going to tell you why because you already know why. Okay? That book had such an incredible impact. outside the insurance industry that had spurred on a team of lawyers out in Houston to do what was called the Houston Law Review. I have volume 6 in my office, page 886 in the conclusions and recommendations. Let me read to you what it says. It says, thus, where an individual who lacks the insurance knowledge to make an independent decision and who is obviously in need of a large amounts of pure insurance protection is sold a low insurance, high cash value policy by an insurance salesman in a fiduciary capacity where they're looking out for you and I's needs, and death occurs, the agent should be held liable for the difference between the amount of pure insurance the premium would have purchased and the face amount of the policy that was sold. That 1969 Houston Law Review led up to a 1973 Senate Subcommittee hearing, 93rd Congress, first session. And I'm going to read to you what it says. I have the document in my office. It says the foregoing was taken from direct testimony presented at Senator Hart's Senate Subcommittee hearings. The total oral testimony and material submitted for the record covered 3 volumes and 2,216 pages. And Senator Hart said, we've presented the highlights only, a minuscule portion of the total. To any thinking American, however, the message is clear. Recommendations for life insurance must come from an agent who is both honest and informed. And let me give you some of the highlights of that 93rd Congress first session of our Senate Subcommittee hearings. Senator Hart says, permit me a brief opening statement. For more than 300,000 times a day, all year long, American consumers pay a bill without having somewhat of a vague idea of what they're buying. These 140 million consumers at an outlay of about 23 billion a year are buying life insurance policies. Ralph Nader, the ultimate consumer crusader. Ralph Nader said in his testimony, for almost 70 years, the life insurance industry has been a smug, sacred cow, feeding the public a steady line of sacred bull. Joseph Belf, professor of insurance, Indiana University, says buyers are told in his testimony, he says buyers are told in a typical sales presentation that if they buy term insurance, they'll have nothing left when the policy expires. The pitch is to the husband's ego rather than to the wife and children's needs. The husband is exhorted to buying living values rather than death protection. If he buys a cash value policy, he's told he can get most of all of his money he pays in premiums back through increasing cash values and so-called dividends, which are in fact a refund of an overcharge. He says the tragic results of this type of selling are well documented in the Widow's study. Herbert Dennenberg, remember I said, remember that name, the guy that wrote that book? Well, he became the insurance commissioner of the state of Pennsylvania. And here's what he said. The motto of the Pennsylvania Insurance Department is, the public has been screwed long enough. Here's the end of that Senate subcommittee hearing, and what it said in its conclusion is that based on all the information, 2,200 pages, all of the testimonials, all of the written stuff that was submitted, Congress should pass a law making cash value life insurance illegal. Let me tell you what happened. That 1973 Senate subcommittee hearing led up to the 1979 Federal Trade Commission report. It said in that report that consumers were losing billions of dollars yearly by ill-informed and inappropriate life insurance choices. I have this book in my office. He says, Michael Perchek says, who was the head of the Federal Trade Commission, he was the chairman, in making the report public today in a testimony before the Senate Commerce Committee, FTC Chairman Michael Perchek said that while Americans spend more than $30 billion annually on life insurance premium payments, the average consumer buys a life insurance policy without even being given the information that is absolutely essential for him or her to be able to understand what the policy really costs. Indeed, I think it's fair to say that no other product in our economy that is purchased by so many people for so much money is bought with so little understanding of its actual comparative value. Most of you have never heard of Chris Wallace. Chris Wallace, when he first came on the air as a reporter, worked for CBS. I'm going to show you a video that'll blow your mind.
Insurance is the most basic, life insurance. 86% of all American families own some form of it. The total amount they are insured for is almost incomprehensible, $3,541 billion. Life insurance is a good example of what the industry is built on. Our fear of the future, our search for protection. It is also a good example of what critics find wrong with the industry. They say the insurance business took a simple idea and made it complicated, then exploited the complexity to make a buck. There are basically two kinds of life insurance, term and whole life. In term policies, all of the premium dollar goes for death protection. Premiums are low, especially for young people, but increase as the purchasers grow older. Whole life is very different. Premiums start much higher but remain constant. Part of the premium goes for death protection, and part of it is put aside. A cash value, a form of savings that can be borrowed against or withdrawn. The big issue in whole life concerns this cash value. Whether it might not make more sense to buy the less costly term insurance for death protection and invest the difference elsewhere.
That issue heated up when the Federal Trade Commission here in Washington released this study in 1979, indicating that most people with whole life policies were taking a financial beating. The FTC figured out the rate of return on whole life policies. That is, how fast their cash value was building up. Almost no insurance company will tell you what your rate of return is. And this FTC study may explain their silence, because it found that the average rate of return for all whole life policies in force in 1977 was 1.3%. 1.3%, at a time when other investments were offering many times that return.
Michael Perchuk was FTC chairman when the report came out. He says the industry's refusal to disclose rates of return makes it impossible for consumers to shop around.
The FTC set out to find out whether people understand what they're getting and whether they're able to compare, not only compare between different life insurance policies, but compare life insurance as an investment as compared with, say, putting the money in a savings bank or investing in the stock market. They cannot make that determination because there's no uniform way of disclosing the effective annual interest return on that investment.
But Robert Frolke, president of the American Council of Life Insurance, says that's not important, because whole life must be judged as an insurance policy, not as an investment.
It does have certain characteristics of an investment, but I wouldn't want to call it an investment, because then very properly you should compare the return of an investment with the return on life insurance, and that comparison isn't wise, nor is it fair, because life insurance primarily offers protection, and the investment feature does not offer protection. So we would be, it's an apple and orange comparison.
And the problem is that most people have no idea of the rate of return on that investment in savings. No idea. And although efforts have been made for years to try and get that information to people, those efforts have been effectively blocked by the life insurance industry itself.
On purpose?
On purpose, yes, of course.
Why?
Because competition, which is what we rely upon in most marketplaces to keep prices down, works only when consumers have the information they need to make informed choices.
The insurance industry is prohibiting the consumer from finding out what the relative rates of return are, so I can compare this policy to that, which is certainly one important factor.
But there are also unknowns, dividends, that do affect it, that are unknown at the time the purchase is made. Now,
but there are certain things that are known. Why not let me know about those?
Because that is just a part of the whole, and it would be...
I repeat, why not let me know about that part?
Because it really isn't too helpful if you don't have the whole picture.
Well, maybe it isn't helpful to you. Maybe it's helpful to me.
To the extent that it's helpful to you, you have it in your policy, but...
the rate of return is in my policy?
We have those things we know. The amount of premium, the cash value. Those are the knowns.
But the rate of return, in terms of just of the cash value, is not in my policy, is it?
No, but you can very easily figure it out if you want to, but we, again, urge that it's a more complicated subject than that, and there are unknowns that at the time the policy is issued, we don't know.
So you're really doing the consumer a favor?
That's our belief. We're trying to give him all of the facts that we have available, and in the process also not mislead him.
Can you even fathom what in the heck that man even just said? So what happened was, and most of you have never heard of the McCarran-Ferguson Act. The McCarran-Ferguson Act said that it is a law that was passed that exempts the business of insurance from any federal government regulation to study them. But listen to what I just said. This law was enacted in 1945. And the law, this is how powerful the insurance industry is, that they had laws changed in their favor that said, you, the government of the United States of America, can't study life insurance. You keep your nose out of our business. What? I could see something like that happening in Cuba, in Russia. 1977, it was repealed. It wasn't a law anymore. Then it was boycotted by the insurance industry. And in 1979, after that Federal Trade Commission report was released, and what you just saw on Chris Wallace, that law was reenacted and passed back into law again. And today, as I speak to you now, the insurance industry is just as big and bad and powerful and nasty as they've ever been. And what we do is we go in there, we teach people how money works. And we show them to buy the right kind of life insurance. And we teach them the three nevers. Never buy any kind of cash value life insurance or whole life, including universal life or of any kind. Never buy life insurance as an investment, and never buy a life insurance policy that pays dividends. Consumer Reports in 1993 came out a three issue, July, August, and September of 93, and they called us the king of term. Their second issue came out and said, did your agent lie to you? That's when Universal Life with vanishing premiums started appearing, saying that, oh yeah, it's buy term and invest the difference. We were starting to change an industry. They were trying to copy us, but it was all masked with hocus pocus. Whole life insurance. Should you buy a whole life policy? Tricks of the trade. Truth needed in insurance. Congress should pass a law, a truth in insurance law, to regulate how they use the illustrations. You understand, it's nothing more than a computer printout. They can print whatever they want and say it'll do whatever they want. 1992, 1993, another Senate subcommittee hearing was done, and this time it was Howard Metzenbaum, and he didn't care. I have all of these complete documents in my office. The opening statement of Howard Metzenbaum at the Senate subcommittee and antitrust and monopolies, life insurance, a shell game of premium padding and savings schemes. He said today's hearings is about how life insurance companies and their agents intentionally mislead consumers about how much their life insurance policies will cost them and what those policies will be worth when they need them the most. 1 year after that, May 25th, 1993, Howard Metzenbaum held another Senate subcommittee hearing. He said, almost 1 year ago, I chaired a hearing in this room looking at the sales practices in the life insurance industry. That hearing didn't make the network news, and it wasn't broadcast by C-SPAN. Put bluntly, it was dull. We heard from actuaries, insurance agents, state officials, and beneficiaries. We saw pages and pages of life insurance illustrations that were practically incomprehensible, and we were given a report by the Society of Actuaries. It was a morning like many other that occur in these hearings in this body, tedious, technical, and thorough. And they went on and ripped the insurance industry a new one. And if you think anything changed, boys and girls, last year they sold 6.3 million cash value policies. Consumer Reports did another one, another article, July 1998. I'm not going to read it to you. I'm just telling you all this stuff exists out there. Who needs whole life insurance? Churn, beware of insurance agent scams. Look at this. Since 1995, life insurance companies, including John Hancock, Metropolitan Life, Prudential, Transamerica Occidental, have agreed to pay billions of dollars in fines and restitutions to policyholders who were churned. But many more companies are expected to be targets of state and civil actions. The great Susie Orman. She says, I have a top 10 hate list of investments that I hate. You could just hear her saying, you can pull this up on YouTube and let her go through it for you. I hate them because they do absolutely nothing for you, and they do everything, in my opinion, for the financial salesperson that sold them to you. And Universal Life, Variable Life, and Whole Life are at the top 10 of my top 10 hate list. Dave Ramsey. Go to YouTube. Dave Ramsey on life insurance. So here's how it works. I know a lot of you on this call know how it works, but I'm going to go through how it works. This is the simple explanation, and I would do this every single time that we picked up policies. So the premium dollar that gets paid before that premium dollar hits any of that cash value, there's 4 things that get deducted from the premium dollar. The first thing is the cost of insurance. Insurance isn't free. The insurance company has got to take money and put it aside in case that person dies. They don't have the money sitting in a cash register. There's company expenses, right? They got phone bills and electric bills and so on and so forth. Then there's premium tax. The law requires the insurance companies to pay taxes on the premiums that they collect. And fourthly is agent commissions have to get paid. And by the time they get done deducting all of those expenses from the premium dollar, what's left over goes into the cash value. Then there's rules that apply to the cash values. There's a low rate of return. You already heard Chris Wallace talk about it. A 1.3% return for the most part. It costs to borrow your own money. It does not qualify, nor will it ever qualify as an IRA, and you lose your cash values when you die. And all we do is just say, just separate the two. Get your insurance and your investments separate. So when you die, your family gets both. Now, just a lesson. I know you know this, but I'm going to go through it quickly with you. There's 4 kinds of term insurance. The first kind is called annual renewable term. Annual renewable term is where the price goes up every year and the protection stays the same. So the older we get, the more expensive it becomes. Let me clue you in, boys and girls. All life insurance, all, capital A-L-L, all life insurance is annual renewable term. All life insurance, the cost of insurance goes up as we get older. That doesn't mean that we have to pay an increased premium, because it can be leveled out over a period of time. So why would anybody buy annual renewable term? Very simply, they need a ton of protection for a short period of time. So let me give you an example. Let's say that Dan Bonsanti and I were going to go into business together. And we decided that we were going to go and take out a loan in a bank to open our business. And the bank says, all right, you guys, we'll loan you the money, but you need to take out a life insurance policy and name us as the beneficiary. Because you die before you pay back the loan, we want to be guaranteed our money. So we need a ton of protection for a short period of time. That's why we would buy it. The next kind is called decreasing term. Decreasing term says the price that we pay for it stays the same, but the protection drops down every year. How's it sold? It's sold as mortgage protection. The problem is this stuff drops down faster than what the mortgage balance does. So when should somebody really need it? Well, when they're at a point in time of their lives of the theory of decreasing responsibility, that their need for life insurance decreases. That's why we have our end of term conversion, that at the end of the period of time, they can convert it for another level period of time, and then let it go decreasing term to age 100. Then the fourth kind is level term. Level term says the price and the protection stays the same. We buy it because we need an amount of insurance for a specific time frame. So let's talk about our term insurance. It's permanent and it's guaranteed renewable. Our precision term and power term is built in industry. It has built-in industry leading values. It is a totally, for those of you that have made sales, man, it is a totally unique underwriting system. Our identity authentication feature, seamless banking information. Look, if I was you, I'd go, wait, hope, what happened? No. So what I would do if I was you is I would go to the on-demand center in POL, and I would download that brochure, options and benefits, and everything that I'm going through with you on here. If you want to know about our product, you really want to know about our product, go get that brochure. Also on demand is our little client brochure on precision term and power term. And you should know our product. See, in that little video that I showed you about how A.L. Williams became what we became and evolved into Primerica, it said that we prepared and rehearsed. We prepared and we rehearsed. We prepared and we rehearsed. I have dozens and dozens and dozens of life insurance policies in my office where we redacted out the names and contract numbers, and man, we ripped this stuff apart. We didn't just know our product. We knew their product better than they knew their product. So I remember like it was yesterday, I'm sitting in a meeting that Greg did, and he said the four fundamental, and I think he was talking to me directly, I'm not sure, okay? But he said the four fundamental beliefs, he says, I need you to write down these four fundamental beliefs and I need you to memorize them. And if you do, you will never, ever, ever have a problem in A.L. Williams. And I said, huh? And he unveiled the four fundamental beliefs, and I'm going to share them with you now. A life insurance company will never give you something for nothing. That is a fundamental belief. Do you understand that that is a fact? That was a fact in 1984 when I heard it, and that is still a fact today. An insurance. So see, the reason that made so much sense is because back then, one of the biggest features, one of the biggest selling products they had was vanishing premium, that you pay your premiums for a specific period of time, and then you get free life insurance. Well, bull, that isn't going to happen. You see, if somebody says to you, well, I don't pay my premiums anymore, the first thing that ought to come in your mind is, wait a second, a life insurance company is never going to give you something for nothing. It's got to be coming from somewhere. So if it's not coming out of your pocket in your pants or in your pocket in your pocketbook, it's coming from your cash values. Fundamental belief number 2, with cash value life insurance, you pay for 3 things and only collect 1. Number 3, there has never, listen to me, I can say this today in the year 2023, the same as I was saying it in 1984. There has never been a third-party article written recommending cash value life insurance for anyone at any time, at any age, ever. The only people that write stuff saying that this stuff is good are the people that sell it. And this 4th fundamental belief saved my life. I can't tell you how many times it saved my life, because you could talk sometimes until you're blue in the face, right, Dan Bonsanti? You could just keep going, man, and keep talking and proving all this stuff. And man, I used to walk in with my books, man. When I used to do an agent confrontation, all the books, I used to walk in with them. It was overwhelming. It was unbelievable. I should have walked in like Jan Shear and just put my gun on the table, man. And then, I would have got their attention. But listen to this. Do you believe this when I tell you that people reserve the right to be stupid? I believe that. Fundamental belief number 4, people with average intelligence and above will always do business with you. So if somebody decides that they want to keep their cash value life insurance policy, or they don't want to do business with you, all that means is they just might not have average intelligence. And there ain't nothing you can do about that. So Norman Basie, in his book, I want to read to you the epilogue of what he wrote in 1963. Bear with me, I'm almost done. He says, I'm sorry that I had to write this book. I'm sure that it will pain deeply a great many friends of mine in the life insurance industry. I am confident that any reader not personally identified with the industry will agree that if the facts that I've reported do exist, that they should not remain hidden. Like a pan with many tiny leaks, none important by itself, but which nevertheless collectively drain the contents, so does life insurance. With an iniquity here and an advantage taken there, drain the financial security of the American people. He says, where now will the American people find a champion willing and able to harness the strength of this financial giant? Who will lay the present sorry mess open to the light of day? Where shall we find a man with the temerity to face these latter-day untouchables, to stand in this path of this juggernaut and cry halt? Does he sit in the halls of Congress or some obscure state attorney general's desk? Who is to recruit him to the cause, and who will pay his way? When he is found and takes the job and does it, he will never have been forgotten, for he will have brought the American people more financial independence and self-respect than 100 years of Social Security. Do you know who he was talking about? He wasn't talking about Art Williams, although it sounds like he was. He was talking about you. He was talking about me, because one is too small of a number to do something great. You see, Art's dad died with too little of the wrong kind of life insurance. And if you ever go back and listen to some of Art's videos, he'll tell you he'll never forgive him for what he did to his mama. In 1989, Norman Dacey rewrote that book, What's Wrong with Your Life Insurance? Here's what it says on page 157. He says, in 1987, the leading seller of ordinary life insurance in the United States was a company with the snappy title of Massachusetts Indemnity and Life Insurance Company. Its friends call it Millico. I cannot print the names the rest of the industry calls it. By the way, Millico is Primerica Life, in case you don't know. We bought that company. What makes Millico all the more remarkable is the fact that its sales records were not set by those super producers that we read about earlier, industry prima donnas at $250,000 a copy. A major part of Millico's sales force consists of part-time agents who welcome the additional income provided by relatively small term commissions. They don't need huge permanent insurance commissions to survive. I'm not going to read all of this, but let me go through the next page. And here's what he said on page 400 about A.L. Williams in his book. He said, no discussion of replacement can be complete without the mention of the A.L. Williams Agency of Atlanta. This organization is wholly dedicated to buy, term, invest the difference. Indeed, its 180,000 part-time salespersons are not permitted to sell anything but term insurance. And they take a special joy in replacing cash value life insurance. In fact, they appear to have become specialists at replacement, and in the process have earned the undying enmity of the conventional side of the business. He says, it's not my purpose to praise or condemn any individual in the insurance business, but I must say that my hat is off to the Williams Group. I've never met any of them, including the founder, A.L. Art Williams, who once wrote a book about his success in which he credited the first edition of What's Wrong with Your Life Insurance of having given him the understanding of the real nature and purpose of life insurance and set him on the road to building the largest insurance agency in the world. And he goes on and he says, I'll end this chapter by simply urging that if someone recommends you to replace the existing insurance, he may well be right. Just make certain that the new policy is term insurance. So let me talk to you a minute about our history before I close this out. 1977, our company was founded. In the 1980s, the Crusade took off. In the 90s, we expanded our product line. From 2000 to 2008, we had a revival, not a resurrection, a revival. 2008 to 2010, we weathered the financial crisis. April 1st, 2010, we went public. From 2010 to 2019, we had an unbelievable new generation of leaders. My question is, who's going to be the next generation? So I want to show you something that you might not know. I know you've all seen the theory of decreasing responsibility, but let me show you what our marketplace looked like when we first started. So in 1977, when we first started, there were 85 million baby boomers. They were between the ages of 13 and 33. And that's why we were so good at what we did, because 8 out of 10 people in those days owned life insurance, and 7 out of 10 of those owned the wrong kind. Let me take you to where these baby boomers are right now. So here's the baby boomers coming across the theory of decreasing responsibility. And that, just as of a couple of years ago, they were between the ages of 55 and 75. And you know what they need right now? Retirement. They need help with their Medicare choices. Do you understand? We're still serving the baby boomers. But let me show you what came in right behind them. Right behind them is 72 million millennials. They're between the ages of 25 and 39. So what we had back when we started with 85 million boomers, you ain't running out of nobody to see. You ain't running out of nobody to talk to. And I don't know, I guess, back in our day, we had Barry White. Maybe that's why the 72 million showed up. Maybe y'all have Drake or something. I don't know. But let me tell you what's coming in behind the 72 million, 90 million Gen Zs. They're between the ages of 4 and 24. So let me put it in a chart for you. When we started, there were 85 million boomers. Right now, there's 228 million. The tsunami of the younger generation just continues. And that's not including the intergenerational wealth transfer of assets, boys and girls. Do you understand that what you got your hands on right now is bigger than you've ever thought? What you have your hands on right now is an industry that is not going to wave the white flag because we're here. Do you understand that? They're not going to throw in the towel. Those jokers are in a big, large, tall building with no windows, no fire escapes, no elevators, and they're just hoping that after we go after them the way we're going to go after them again, that building doesn't just topple over, that it comes out one floor at a time as we knock their tails off. Here's the bottom line. It's our responsibility to be responsible. It's our responsibility to carry the torch for what was started in 1977. It's our responsibility to do more appointments, to spread the message. Because if we don't, no one else will. It's our responsibility, period. It's all yours, Dan.
Jack, you took our breath away. Unbelievable. I wonder how many people on this call tonight, on this Zoom, on this coaching clinic have ever paid a death claim. Because if you really want to take what you heard tonight and put it next to your heart, that happens when you have to take a check and look a widow or widower in the eye and talk to them about the job that you did, the amount that they need, and the amount of the benefit. It's not the glamorous part of the business. We all fall in love very easily with through the investments. We feel very professional doing that. It's an important part of our business. It's important to the clients, but boy, it pales in relationship to what it's like to bring a check to a family that has lost their loved one and means of support. So what you've done tonight, Jack, I hope it has lit a fire under our butts and in our hearts to get out there and go to see as many people as we can and take the history and take what we know to be the right kind of future for our clients, get them the protection they need, as well as put them into the kind of growth opportunities that we have available in investing. I'm just curious. I don't know, you can't see everybody, but how many people on the call? Just raise your hand if you paid a death claim. That's incredible. Every one of you has a story about that experience. Amazing. Amazing. So thank you, Jack. I can't even imagine how much time you invested to help us with this. It's massive, but this is one of the most important coaching clinics that we've had. And if we can even take a small percentage of what you've presented to us tonight and bring that to our teammates and help push this thing forward, it'll be a great thing. So thank you from the bottom of my heart for what you've done today.
Dan, it was my pleasure. If you can, if someone couldn't tell, I love this company. I'm in love with this company. I love what we stand for. I love what we do. Carolyn, Carrie, you got your hand up. Go ahead.
I just wanted to say, wow, Jack, I'm a crusader again today, born again crusader, always a crusader, and will die a crusader, and I'll go down fighting. But I did want to mention that something new has developed. On TikTok, they're selling IUL.
That's right.
As infinite banking or
That's right.
infinity banking.
That's
and
right.
and they're selling it to young kids.
That's
To
right.
young, people that aren't even married, people
That's
who
right.
don't even have children. So it's criminal what they're doing. They're unashamed. And it just shows us that we have work to do. We've got a lot of work to do. This is
I'm going to do a workshop on the infinite banking. John Lavin, Chris Howard on the LFIC calls just did a workshop on that last week. We are another field working group that I'm on is with Chris Howard and John Lavin and Mike Burrow, and we're putting together stuff to really compile arrows for your quiver. Okay, I promise you that if we do what Art Williams commanded us to do, which is build with crusaders, if you want to recruit people and you want to build your business, now that does not mean that you need to learn how to do what I just did. That's not what I just said. What I said was somehow you've got to be able to articulate our crusade, and you got to look people in the eye, Scribner Jr., okay? And you got to be able to say to them, we need you to help us fight them. We are outnumbered. I remember when Rita Huckle did an event that was close to, I guess, what I just tried to do. And she looked out in the audience and she said, you don't have the right as a human being not to let people know this. That's the way I feel right now. I feel that way again. Money Mike, talk to us. You got your hand up.
Hey, buddy, great job once again, as always. And I apologize, I haven't been on in a while. But Carrie, you brought up, I'm dealing with a client right now, and I wanted to share this story because it is out there, and I'm dealing with it right now. It's an infinite banking, small client of mine, small investment client, very successful guy, owns and operates a couple businesses, had a baby about 3 years ago, started talking to him like, dude, you need life insurance, you need life insurance. Was making a follow-up call with him just about 2 weeks ago. And I said, hey, did you get life insurance yet? He goes, oh yeah, I just bought into an infinite banking policy. I'm like, number one, why would you never call me on that? But here's a story. Guy put $150,000 lump sum into it last year. And he got to put $150,000 in this year and $150,000 next year. So 3 years in a row, $450,000. Right now, the first 150 went in February of last year. So he's coming up on his 1 year anniversary. His cash value right now is only $95,000 after he put in $150,000. And now it's a $4 million policy, right? So it's a big policy, but he bought in, he got sucked into the idea that he can borrow his own cash out of it. The agent obviously told him he can't borrow it for 6 or 7 years. So we all know this scenario. But a smart guy, and now he's trying to justify his decision, and he hasn't. By the way, our $4 million would be about $6,000 a year. And this guy put 150,000 into this policy. And right now he's trying to justify his decision. So he hasn't made the decision yet to transfer it over. But we're still working with him, and because he's a smart guy and he feels like he made the right decision, right? And he can't understand why our premium is $6,000 a year for his $4 million, and he's spending 150,000 a year.
That's incredible.
Going
Mike.
on right now. So Kerry, you're absolutely right. It is still out there and it's happening every day.
So
I just wanted to share that with you guys, man.
We appreciate that. We need more and more stories. The Crusade. I'm looking through the 127 people that are on this call, and I think Ann Baxter is one of my heroes, and I think if it's the same Ann Baxter, Senior National Sales Director Ann Baxter from up in PA. And if that's really you that's on here and somebody didn't steal your name, do me a favor if you would, and make yourself open your video if you would, and your mic, and make a comment or two.
Hi. Hi, Jack.
Hi, Ann. Long
Hi.
time no see. Where are you?
Right now, I just got back from New York. I was in New York for 4 days with my daughters, and Ray Burns introduced me, told me you were doing this. I said, oh, I know Jack. I love Jack. I'm going to get on and watch it. So here I am. And you did an unbelievable job. I mean, seriously, I remember, I was there. It was like we had a war going on, and we still have that war.
Yep. And I think we forgot it, didn't we, Ann? I mean, we just kind of put it to the side. You know, it's kind of like, you know, we accept what we accept, kind of like life, you know, but man, let me tell you, they're out there again, aren't they?
Oh yeah, I have stories too. I have so many stories, and I actually love the Crusade. It makes my blood go, it just invigorates me. I really do. I love it. I love the Crusade.
I know. I love that you snuck on this bad boy. So
thank you so much, Jack. Thank you.
Thank you. All right. Anybody else? Any questions, comments? I promise you, folks, we're gonna keep this crusade going, big time, big time. Okay. Anybody else before I lock it down?
Jack.
Yes.
Patrick Nadel.
Hey, Patrick.
Hey, there was, I actually posted it on Facebook, but there was just an internal memo that was leaked from Mass Mutual. They're threatening to terminate any agent that is caught trying to market their whole life policies or universal policies by using infinite banking to promote it, or your family's private bank. I was shocked to see an actual memo threatening to terminate anybody that was actually selling their own products, but using that thing.
And I think it's, you know, because of the lawsuits that they face, bro, that they're just afraid. I mean, you know, these people are stupid, but some of them are not as stupid as, anyway.
Yeah.
All right, boys and girls. I hope that what I did tonight helped you like it has helped me over my 3.5 decades of being in this business. And if you ever need someone to go on an agent confrontation with you, I'm your guy. With that said, we'll see you all next week. God bless everybody. Have a good night.
Good night, Jack. Good night.
Awesome. Thank you, Jack. Have a good night.
Great job. Thank you.
Thank you.
Thank you.
Very
Great training.
good.
Thank you.
Thank you, Dan.
Thank you,
Dan.
Thank you. Thank you so much.
Thank you, Dan.
Great job, Jack.
God